Hi. Hi, and welcome to another episode of Discourses. This week we have Soykan. He is a person who works with the stock market and does investments. So we'll be talking about that. He has recently graduated in financial risk management from Trinity College, Dublin. He has keen interest in stock market and also has an extensive portfolio. So whenever we get together, we talk about news that makes up the market. And so I thought of like sharing it with all of you guys here. So to describe him, I would say he's highly disciplined and he has eyes on the future, and you can see it with him during the conversation we'll be having. And mm, I'd say like your money is safe with him than in banks, in cryptocurrency for that matter. So welcome to this episode, so I can't glad to have you.
Thanks, Ekil. Glad to be here.
Yeah, the pleasure is mine too. So to start off, I'd like to know what kind of investments that you do. Like, mm, have you been doing this for a long time? What exactly are you into right now?
Yeah, I've been investing for the last, I believe, 6 years.
Mhm.
And I basically opened my own bank account. So what I do is basically I try to find stocks mainly. I try to invest in stock market.
Mhm.
Uh, the method that I'm using is the value investing, which was founded by Ben Graham
Mhm.
uh,
Can you
in
tell
nine.
us what exactly value investing is?
Yeah, so value investing is basically you try to invest companies that sell below their intrinsic value,
Mhm.
and uh, you wait for them to catch their intrinsic value over time.
Mhm.
Uh, this is not uh, short term short term investment.
Investments, it takes time, like.
Yeah, exactly. Um,
And how exactly would you know uh, whether the company is below the intrinsic value? What are the key factors that you look into?
yeah, like basically before that actually this my methodology has 4 steps.
Mm-hmm.
Uh, so first I need to understand the business of the company. But I'm not talking about to understand how the company makes money. I try to understand uh, what is going to be company's position in 5 to 10 years later. So if I create a picture on my mind in
Mm-hmm.
that, then I check if the company has a competitive advantage. Uh, Warren Buffett calls that company has a moat.
Mm-hmm.
Uh, which should protect the company for several years from the competition.
Mm-hmm.
So if I happen to find a mode for that company, then I check the management and see if they're honest, uh, like good capital allocators. Are
Mm-hmm.
their incentives are parallel to the shareholders?
Mm-hmm.
And so the fourth step is the valuation. The company has to sell cheaper than the intrinsic value. So um, basically, the valuation of the company is the most important step.
Mm-hmm.
Uh, and how you can do it, basically, there are several methods for calculating the intrinsic value, uh, or or basically try to figure out if the company is cheap or not. For
Mm-hmm.
instance, there are several ratios. For instance, price to earnings ratio, which is basically uh, you divide price per share or earnings per share. So
Right. So, Soikan, what you're saying is that there's a difference between the market value of a company and the actual value of the company, and you see if it's low, you invest in these type of companies. Yeah.
yeah, that's exactly right. Like again, Warren Buffett calls it price is what you paid, value is what you got. So
Mhm.
Yeah, that's exactly correct.
So you've been investing, sorry, for like 6 years now, yeah? And so
Yeah.
what lessons have you learned? Like, what are the changes in the market that you've noticed over the years?
Um, so, okay, I first started investing in Turkish stock market.
Hmm,
And when I first started, I tried before I adapted value investing, I tried many different approaches for investments.
yeah.
For instance, I tried to time the market many times,
Hmm,
which I consistently failed.
okay.
uh, for instance, market timing is basically you try to figure out the bottom of the markets, stock market, or not maybe not just only one market, but one security or something.
Mhm,
Uh, so I tried that and I failed.
mm,
I tried day trading.
mm,
Uh, I failed. I'm not saying that day trading is wrong or something, but I I'm not able to do it.
mm,
And I think like people who can do day trading and perform well are probably not that much,
mm.
like the number will be probably small, which consistently earn money by day trading.
Okay. So,
So yeah, after that I started to invest by using value
mhm.
invest methods. After I read the Intelligent Investor book
Oh,
written by
yes, the
Graham.
famous red book.
Yeah, it is the most famous book in investment history, probably.
Mm,
Uh, so yeah, these were probably uh, my two mistakes. Um, Other than that, I have some mistakes, obviously, by not taking any action when even though I found a good company,
mm,
or there were some cases that I sell too early.
mm,
uh,
mm,
Um, so yeah, I didn't have any until this year. I didn't have any investments who lose high percentage in value.
mm,
This year, even though I shouldn't call them mistakes, but we will see in the future because I am determined to hold these investments, which I don't want to call their names, but they're in one of them are located in China. So this year I also learned how political risk um, is a real risk.
yeah, definitely. Yeah.
Yeah. Um, so yeah, this kind of stuff.
So these are three important lessons that you've learned over the years. Uh,
Yeah.
So we'll get back to the Red Book. So what are the basic necessities of an investor? Like when a person is starting to like invest or starting a career, not exactly a career, but for example, is starting to like invest in something. So what are the basic principles that I as a person should be aware of while investing apart from the Red Book?
Yeah. Um, so that's a good question. First of all, I think a person needs to, adapt the philosophy of value investing.
Mm,
Uh, like uh, in Ben Graham's book, he provide two definitions. One of them is Mr. Market
mhm,
analogy, which is basically uh, he says that stock market is a place where you make business with one crazy, unstable man
mm,
who tries to sell you some securities or buy securities from you.
mm,
So if you really understand this analogy, I think there you are good to go to next step. So the other step is what he calls margin of safety. So even though I'm making some valuations for my investments or like companies,
Mm.
even if I found a company that sells below its intrinsic value by 5% or 10%, I still lose some money because like markets are not always efficient, and the low price of a company can go even lower. So
Mhm.
what Ben Graham tells is that sorry about that. You need a margin of safety, like 20%, 30%, whatever you are comfortable with.
Mhm.
And buy a company's buy a security that sells below that amount of margin of safety in order to prevent some huge capital losses.
Okay.
So these two steps are really important to adapt
Mhm.
for a person who is starting to investments, I think. And other steps are, this is not a job which requires a high IQ. This is also Warren Buffett's quote. You don't have a lot of IQ to be a successful investor or to beat the market. You need discipline and you need patience, basically. Charlie Munger says, what I do is sit your ass off investment. So after you find a good investment, the other important part is to stick with your analysis, trust yourself and trust your analysis, because uh, even if you can find a good company, the stock market can think otherwise for a short period, and your psychology needs to be
You start
sharp.
to panic. Yeah, normally I feel the
Yeah,
same.
exactly.
Yeah.
Because basically, what value investors do is basically benefit from uh, bene- benefit from the inefficiencies that most of the people are providing to us. So
Okay.
basically, swimming against the tides. What you are doing is basically so. Yeah.
Oh, I never thought of it that way. Like trading, I thought it's directly related to the performance of the company. But now it's like if you're investing, it's directly related because in the long term you get to realize the health of the company and then you invest accordingly. But day trading, it's like as you said, going against the flow of what is actually happening in the company. And so um,
So so what did you say about day trading?
day trading, as you mentioned, it's like going against the flow. So it's like
No, no.
making.
I meant what I meant to say is when you are using value investing method, you are basically doing the opposite of the other 90% of people do. So yeah.
So what are the time commitments like? So if I'm starting off with trading from zero, from scratch, um, should I be like trading it 1 hour in the morning, do that and go for my daytime work and then come back, or do should I like spend hours on trading, investing, like researching about
Yeah,
investing
yeah.
and so on?
Yeah. So the thing is, one of the benefits that value investors or basically long-term investors has over the traders are we we don't need to sit in front of the computer all day,
Mm-hmm.
uh, clicking to mouse and giving orders to market. Um, what we are doing, what I am doing actually, is basically I try to read, uh, catch up with the news. So in the mornings, I try to read several newspapers. Uh, after that, I'm reading annual or quarterly reports that companies provide. And basically what I do is I try to find companies that I first understand and continue to next steps to find something good. And if you find something that you are comfortable with and you are like 90% sure that you are going to get high returns over time, then you basically give the order and you just wait. If the price of the company that you select drops, then you buy more. And yeah, that like
Okay.
the story behind the company changes. For instance, you buy the company because it is undervalued, because it earns uh, high returns on invested capital or so on.
Mm.
If the story behind these any reasons change, then you try to decide if you should sell the company or not.
Right, right, okay. Oh,
Yeah.
that's interesting. Because for
So
yeah,
yeah, basically, yeah, you don't have to pay so much time trading, but like majority of your time needs to go to reading stuff.
mm,
So, yeah, that's what I will say. Yeah. So most of the time I try to read. Like now I'm also working, but in the weekends or in like Warren Buffett reads 5 to 6 hours per day. Just he just reads that
right.
5 to 6 hours a day.
So so for me, like for most things I do, I try to like find the why in it for me. Like why am I doing this? And I try to answer that first before I work on it, work on any assignments or work related stuff. And I was thinking like why might be personal, so I wouldn't be asking you that, but um my question is, what is the most exciting thing about stock markets that propels you to do it, like do investments? What do you enjoy most?
Well, that sounds like a interview question.
No, I'm just curious about what
Yeah,
exactly motivates you.
yeah. I don't know the idea behind that. Uh, I basically love. I like. Uh, I'm interested in finance and specifically the stock market. I don't know. I felt that it is fascinating, like for several years. So I don't have any specific answer to that question, but uh,
I'm sorry I put you on the spot like that, because if the
yeah,
same question comes to me, I'll be like, okay, I haven't thought about this yet. I'm fascinated about the thing and I'm just doing it because I like it. So that's
yeah,
all I would be saying. So
yeah,
yeah, I can take that answer.
yeah.
So
Okay.
we'll talk about something more exciting then. Uh, for instance, I have like 10,000 euros with me, like in savings. And so I would like to like so these are my two priorities. I want to like invest in something that would ensure that the value of the money beats inflation. So I don't want my money to like lose its value because I've worked a lot to get that money. And second is I want to get more than the return I would be getting out of like interest. So if I put it in the bank, I'll be getting interest, but I don't want to like park it in the bank. Maybe I'll invest it with you. So what would you be doing with my money, with my 10,000 euros? Like, how would you be using that?
Yeah, so it's a really good question. So it's basically depends on the current economic environment. For instance, you said your main goal is to beat inflation, and let's say it's if it's 2% and basically the interest that you get from your deposit is, I don't know, let's say uh, also 2%, and 10-year bonds give you 2.5%. I'm just making these numbers up right now. So basically you are beating the inflation by just investing in 10-year bonds. But uh, there are a lot of research that show that over the long term, stocks are the best investment classes, and they consistently beat uh, bonds and gold and other cash
Mm-hmm.
or stuff. So uh, the probability that you achieve your financial goals by investing in stocks are really high compared to other classes. So what I will do is, if you give me your money
Okay.
for me to invest, like I'm not saying you should, by the way. uh, I probably wouldn't do anything differently that I explained before.
Mm-hmm.
Uh, I usually mostly try to find stocks. But if you're investing by yourself and you have no idea how to analyze a company, or you don't know accounting, or uh, the best choice probably is to invest in low cost index fund,
Mm-hmm.
and the one of the best one is probably S&P 500 index fund.
Mm-hmm.
So what you are doing is, by doing this, is basically you are investing your 10,000 euros to these 500 companies. So yeah, there is basically a diversification, and you are basically investing 500 best companies in the US. So
Mm-hmm.
um, yeah, that I usually don't invest in bonds, but I need to say this, in the history, US the interest rates in United States went to over 20%. So in that time, if it happens again, then I would probably invest in bonds in that kind of environment, because
Mm-hmm.
basically you're getting 20% without any risk. So in that kind of environment, and also it is affecting, like, high interest rates are also affecting the current value of the stocks as well. If
Mm-hmm.
you're using basically the discount rate that you should use is related to the interest rates, real rates in that case. So if you are discounting the earnings or cash flow of company back with a high discount rate,
Mm-hmm.
then basically you calculate the value of the company really low. So intrinsic value of the company really low. So everything looks expensive in the stock market, probably. So with 20% interest rate, it makes more sense to invest in bonds. So
Uh,
yeah.
what is your opinion regarding the current state of the market? I know it's a big question, but um, because here in Europe, like inflation's rising because there's more demand for the current supply. The supply has been like contracted with the COVID, so it's not able to keep up. So there's high levels of inflation. So what do you think about the performance of the companies that, especially the ones you have invested in here in Europe for the coming long term?
Yeah, so the stock market is really volatile this year. Basically when there is a good news, the stocks are up 5%, and when there is bad news, stocks are down 5% per day. So there is really much volatility. So when there is high inflation, what I try to do is basically find this is the this corresponds to second step of
Mm.
the fourth step methodology that I'm using. So I try to find companies that have pricing power, which I'm like, what I mean is that um, companies that sell or provide a service or products that people can't live without, or
Oh, yes,
if
yeah.
if there is
Like
high demand for
utilities.
utilities, like, yeah, and also like
Consumer goods, maybe.
yeah, like for instance, Coca-Cola would be the best example probably.
Okay.
Coca-Cola sells products, and basically it has a pricing power that uh, it can transfer its costs to their customers, basically, because people would still buy Coke whatever
During
the price,
recession.
yeah, whatever the price is.
Yeah,
So
the demand is inelastic.
sorry,
The demand is inelastic. Did I say that right? Yes.
demand is, sorry, what?
Inelastic. So it's like,
Oh, yeah. uh and so basically, what during high inflation, by investing these kind of companies, what you get is these companies can protect their margins and earnings by increasing their products prices, because uh, their basic costs, either the raw materials that they get, or the OPEX, the operating expenses,
hmm,
usually they increase when there's high inflation, because like they need to pay higher salaries to their employee, and raw material prices are getting higher, or like supply chain costs and so on.
hmm,
So if you can increase your price, you can protect the margins, because higher costs usually decrease your operating margins, so like profit margins. So yeah, like in high inflation, these would be the best way to invest probably.
okay, to look for companies that produce like products like Coca-Cola, where there's no fluctuation, like large fluctuation in demand. But
Yeah. And like there are some companies that considered recession proof, like um well, for instance, Google is one of the best businesses in the world, and it has real, like, great economic modes that protect them from the competition. And even this kind of environment where the ad spending decreased so much,
mm,
they're still able to increase their revenues, even though their net profits have fallen some compared to last year.
mm,
They still are able to uh, grow, basically. So what happens to Google in terms of price is basically overreacting, in my opinion.
okay,
Uh, so companies with competitive advantage, like Microsoft, would be another one. Like the mode that Microsoft has is the switching cost. For instance, you can't you you can't choose another software platform that replaces Excel basically.
Hmm.
So these companies are best choice probably during the recessions, although their prices are have fallen for some bit. I think this is not really a fundamental problem, and I don't have any positions in that these companies, by the way. Uh, I think the market is overreacting to them, and I think they provide a great investment opportunities. These kind of companies. And if you look at the price of the Coca-Cola, basically there's no change at all compared to S&P. Like there's still 2% decrease, I believe, year to date. But compared to S&P's decrease, like it's nothing because people still are buying Coca-Cola basically.
True that. And so I think that's a good place to end for now. So is there anything you want to say before we come to a close? Is there a line you want to say that you live by or a quote that you really like to share?
Oh,
No
yeah.
pressure.
Well, I like a lot of quotes, but um, does it have to be related with investments or?
No, anything would do.
Yeah. Uh,
Give me a native one then.
I like the analogy of Warren Buffett and Charlie Munger, and where they say that you should work on a job that you will be happy if you are not even get paid. So this is one of the best quotes that I like in uh, for philosophy of in life. And so people really shouldn't invest on their own. I think if they don't like it a lot. So
I think that's a good one.
yeah, and this relates to every job. So if you're an engineer or you are a lawyer or something, so this is the best quote that I like probably. Yeah.
So we've come to the end of this episode. And so to the audience, I'd like to say thanks for the support and the kind of um, feedbacks that you give me and the people I have on as guests. And so until next time, I'd like to say goodbye for now. Bye.
Goodbye.